Good evening, friends. Have not been able to upload the video for a couple of days, was not well. But today I shall compensate the gap and give you a detailed analysis of how we shall trade on Monday, which is 29th of August, and also going forward the week of this week. Friends, there has been a lot of movement post-market with a lot of news flow, but let's see what happened. At 250, now keep a watch on this particular point, which is the volume that was traded. At 215, you had 43.37 million volume traded. And after that, the next 1 hour, we had 22.89 million contracts traded. Okay. Now let's see how that trade happened. What happened in those 2 hours? So for that, I have gone into the data of 26th of August. So on the candle between 2:30 and 1:30, and even before that, there was a huge short covering. Now, before that I go there, if you see, there was a long build-up at the first hour of the day on Friday. There was a short build-up, but not that big, 222. Long unwinding, not that big. Long build-up, not that big. 12:30 to 1:30, again short build-up, not that big. But see, after that, there was a short covering. That means the smart money closed their shorts. But then suddenly, in the last 1 hour, between 2:30 and 3:30, there was a huge spurt in the short build-up. There was a build shorts. Now let's see how that thing spanned in our chart. And you see this big candle that formed, which was 7.393 million. So basically what I'm trying to say is that it was only in the last 1 hour that a lot of movement happened. Now for that, I would also like to go into the movements in the news flow, what happened after the market hours. There was a sudden fall in the Dow. The Dow Jones fell 1,000 points. Now, when I go into the Dow Jones chart, now see here, 25th August and then 26th. This is a futures chart. Futures go on continuously, they don't stop. Huge, there was a fall. Now, friends, why did this fall happen? Everybody must be thinking why the fall happened. What happened on the 26th that the fall happened? Now, for that, I have plotted that for you, that what exactly happened. Now, what did Fed mention? Fed said that need to be cautious in thinking that inflation has peaked. Now, you have to understand Mr. Powell's speech. He speaks, when he speaks, he gives out 10% and he hides 90%. On a very simple term, it is like the bikini of a woman, which hides 90% and displays only 10%. But Mr. Powell is opposite way around. He will say 10% and you have to decipher 90%, and the market deciphered that. When he said need to be cautious in thinking that inflation has peaked, that means in his mind, he has absolutely no thought that I am going to now stop or moderate on my rate increases. Then he said, even with a series of 4 consecutive interest rate increases, totaling 2.25 percentage points, Powell said this is no place to pause, stop or pause. Now that spooked the market. Even though benchmark rates are probably around an area considering neither stimulative nor restrictive to growth. This one phrase spooked the market. So basically what they are wanting to increase the rate close to 4%. We have also forgotten in the whole process that Fed still continues to contract the balance sheet size. That means the free money that they had given during COVID times, they are still pulling it back, and the FIIs have to sell in the emerging markets and bring the money back to the United States of America. Both the above together in very simple plain language for us to understand, which means that money which was cheap now would become costly. INR would depreciate and may go to 82 and above. This means this would make import costly, and we as Indians, we India are any day net importer. We are not a net exporter, we are net importer. So when the import becomes costly, this would become a challenge in managing the fiscal deficit, which would result in further tightening of interest rates in India. And that is negative for India. Now, coming back to my chart, I will again go back and see what happened in the last 1 hour. In the last 1 hour, did the FIIs or the smart money have enough chance to square off all their longs, to see that? I want to see the actual order flow in the last one. This is a 1 hour movement here, 1 hour interval. So in the last 1 hour, only 169,000 contracts were closed and subsequently bought. So you have to look into this on a diagonal basis, not on a horizontal basis. This is what happened. So basically, these people did not have the chance. They did not have the information well in advance that this is going to happen. So Monday is something where we shall be deciding on how the market is going to move. Now I go into my analysis. First, I go into daily chart. And this was, I was really expecting, I was hoping against hope that this is going to happen. On a daily chart, the chart was forming a perfect cup pattern here. I was expecting the cup to be like this, that it will extend from the cup, and once the cup breaks, the market will go up to 20,000 or whatever it is. But thanks to Mr. Powell, this pattern seems to be now on a challenge. Now I'll delete this. It takes me some time to delete. Okay. Now, what is the other pattern that I can see? For that, I will take you to a 15-minute chart. Now, on a 15-minute chart, I will draw a parallel channel. And this, bear with me for the time. I need some time to draw this because I'm drawing this absolutely live for you, all of you to see it. Wait, please. Here. This is a parallel channel which is on the upward trending. Okay. And I will draw something which will surprise you. So what do you see? An inverted flag pattern. So this is the pole of the flag, and this is the flag itself. The pole was 19th August till 23rd August, and the flag 23rd August till now. Now, friends, the rule says that If the flag breaks, then the pole will be as big as the earlier pole. So I will just copy this, Control C, Control V, and put the pole here. And that pole touches 16,869. This is one parameter that I've seen. My second parameter that I want to also see is I go on a daily chart, and now I will draw a Fibonacci. From the low of, I'll draw the magnet. From the low of here, where is the Fibonacci? Here. From the low of here till the high of this candle. And then go back to a 15-minute. Reset the chart. So on the Fibonacci, what I see is, daily candle Fibonacci. And what I see is that the 0.38 to 16,904. Interesting data. Go back to the 15, reset the chart. Friends, if you are going to skip the video, then you'll miss what the learning is. So the Fibonacci also points out that at this is the level where we can see the market to come down. With this, I'll delete the Fibonacci. Now, so that is coming to where? It's coming to this particular Chintu candle. I always believe in this candles. This candle, and that is 16,869. So my downward level that I see going forward is 16,869. Now you may say that we are at 17,582 and here you are talking about 16,869. Are you mad? Friends, I may be mad, but this is what the level that I see. So with that, there are some positional levels and there are some intraday levels that I want to brief to all of you. Now let's look into first the positional levels for the week. The first criteria for this position to get activated would be that the market has to come down below this level, which is 17,345. If the market comes down below that, 17,345, then the first support, and not a very strong support, would be at this point, which is 17,161. Nothing, and this is at the position level for the week. Nothing above that. And if it breaks 17,161, then we are looking for 16,869. Friends, that does not mean that tomorrow you take a put and wait for it. Wait for the signal to happen. If you have the jigra or the courage to give the market, wait up to the break of 17,345. And then you can take a put, which will give you from 17,347, 345 to 16,869. This is what I'm looking for in this week. Now, on the intraday, let's talk about intraday. That's Monday. Intraday, friends, if the market opens gap down and it just touches 17,345 and just moves like it does kabaddi and just touches and then moves back, you can consider on a risky basis taking a call with a stop loss of 17,345 and wait way up to it touching this particular trend line. Now, if the market breaks this trend line and goes up, then all my analysis is gone, finished. But I'm not expecting that. What I'm expecting is that if it somehow just touches this and moves back, then 150 points, you will see an uptrend. It will touch this channel and then it will start coming down. And if it does that, sit on a put way up to here. Clear? Now, what happens? Now, what happens if it opens in between this? If it opens in between this, then I'm not sure what to do, because my reward and my risk are almost the same, some 100 points. So I will not trade. I will just observe the market. Either it has to touch this and take a rejection, or it has to touch this and take a support, or it has to break this. The other option, friends, for you to do is that if it is opening below 100 points, go to my playlist. There is a video on how to trade gap down. Just follow that. Okay. Today I am not looking for, and I'm not giving you any targets on the upside, because I am neither bearish nor bullish. And I repeat, I'm neither bearish nor bullish. But I would wait for the market to give me a signal. So friends, to summarize, this is the pattern that I'm looking for. Now, if it opens here, somewhere much below, then the pole will be broken. And a broken pole cannot stand. So to bridge the pole, the market has to come up and bridge the pole. If it does that, then the pole would be formed and I will see a downtrend. Keep the important levels marked, and the following are the important levels. Here, first level is this one, 17,487. Below that, if it opens with 17,487 and this and 17,347, we have got a very risky situation, because we do not know whether the market is going to go up or come down. So don't trade. You do not have to trade every day. Yeah, some days it is good to even observe and watch the market. Let the market come into your net. Let the market come into the net that you have given. Let the market come into the plan. And the plan is, this line touches, take rejection, I will take a put. This line touches, take a rejection, I will take a call. Now, if it breaks this line, sustains, I will take a put. But I'll be very cautious, because there are many support levels. And this is one more support level. And that support level is here, 17,265. So, friends, that's the way I will trade. I'll summarize again for the benefit of everybody. Keep this pattern drawn. Market opens in and around 17,345. See if it is touching this and going up. If it goes up, I will take a call, but with a strict stop loss of 17,345, and trail that stop loss up to the level of this. Opens in between this small triangle, I'll ignore it. Opens in between this, I'll ignore it. Let it show me where it is going to go, and then I'm going to trade. Friends, my Guruji says that you have put in your hard-earned money into the market. Do not trade at random. Secondly, for all those who have skipped the videos, you spend 10 to 11 to 12 hours in the office to earn 50,000 or 60,000 rupees. Can you not spend 20 minutes to plan yourself out? Yes, please do that. That's all from my side, friends. If you like my video, please subscribe to my channel. My Telegram channel is there in the description box. Join there. I keep on giving updates. I don't give any trades. I keep on giving updates. Subscribe, like, and share it. Thank you so much. Cheers, sayonara, cheers, and bye-bye.